streams at for this particular exam. Today's session is focusing on one of the topics in finance. This is an overlap topic which will be useful for SEBI general. It will be useful for SEBI research, and it can also be useful for all the other streams from the general awareness aspect. However, there is a topic of recent developments in the financial sector for the SEBI general and the research papers, where financial aspects, or small concepts related to what you are hearing in the news, what is developments are happening, and conceptual understanding of related aspects can be of understanding. So few of these news and the topics that you should be aware of is being done today in today's session, right? So we will first look at few news, few developments that have happened, and based on that we will practice some MCQs to give you an insight into how you should prepare for the finance paper, for the finance subject, for SEBI research and for SEBI general exam. Okay, so let's look at this one news that came in the last week of December, where SEBI had its last board meeting for 2021, and they had brought about certain changes with relation to the IPOs and the preferential issues that are done by the companies, right? So last year was saw a lot of IPOs come in. Around 62 IPOs came in, and a lot of them were by startup companies also, right? So keeping in how they have performed, how the listing happened, what type of investments were made, how the money was being raised, for what purposes they were being raised, how the price band was being determined, certain rules SEBI has come out with in its last meeting, right? So they were related to the utilization of the funds. Like, so when an IPO is coming out, there is an offer document. Okay, so these are things that you should be. Prospectus. Okay, so what is this prospectus? It has to give an object. So when I'm preparing these, I'm discussing these recent developments. They are covering aspects related to finance. They can cover aspects coming out of Companies Act also. For example, prospectus is a chapter covered in your Companies Act topic, right? So there has to be an object clause that is there, basically, which is telling the objective or the reason for which you are raising money. So most companies tell a few things, and they then say we need it for general corporate purposes. Okay, so now SEBI has set a limit as to how much you can use for general corporate purposes, and the other money you should be able to define why you are using it, what are you going to use that money for, and who is going to take care and check whether they are using that for that purposes, whether it's defined or not. The CRAs, the credit rating agencies, have been given this work to do. Okay, and then there are rules related to anchor investors, lock-in period, the price bands. All these have been mentioned in this particular board meeting taken by SEBI. Okay, so few questions I will take where I will discuss in detail these aspects, what exactly the decisions SEBI has taken. But it is an important development in the financial markets, an important decision taken by SEBI recently. Okay, another news, this can be more from the general awareness point of view. So SEBI keeps constituting various committees. So this is not that it is a one-time thing or once in a while they do it. SEBI constitutes various committees for different purposes, for different entities they regulate, markets they regulate, new things that they have to come up with, new regulations they have to keep coming up with. So recently in 2021, again in December, they have set up a committee for leveraging regulatory and technology solutions. So, technology is an important aspect in all the financial sectors economy nowadays, right? Even RBI has set up a separate fintech department. Okay, so that was another development that has happened in late December or early January. Right. So SEBI also has constituted this committee. So the name of the committee and for what purpose it is to enhance the technological capabilities and to explore appropriate technology solutions for early detection of market anomalies. Right. So SEBI is what? So SEBI is, why is this important? Because this will help SEBI to perform its function as a regulator, because SEBI is the regulator for the capital markets, right? And in finance, what if it is asked for you, what are the key functions of SEBI? So what is it? They have to see that the markets work in an efficient manner, right? So there's transparency. They protect the interests of the investors, right? And they regulate the market and the various entities, right? So what are the various entities? Like the stock exchanges, the depositories, the who else, the intermediaries are there, mutual funds are there, brokers are there, right? So a lot of intermediaries in the capital markets are regulated by SEBI. So they are looking to enhance the technological capabilities to be able to detect any kind of market anomaly, any kind of misdoing that may happen in the market, and they are able to detect them before rather than after such instances taking place. And this committee is going to be head by Ms. Madhavi Puri, who is an ex whole-time member of SEBI. Right, so that is another development that has taken place from SEBI's point of view. Another news that came out last week itself was that CDSL unit. So CDSL is setting up a unit. It's a subsidiary that CDSL is setting up, who has got SEBI's nod to become an accreditation agency. Okay, now in this relation, when this news you hear, and this will become effective from 1st Feb, they will get a license. The name of the subsidiary that CDSL has set up is CDSL Ventures Limited. This CDSL Ventures Limited, and they have got this license for 3 years from SEBI. Okay, now what you should be thinking when you read this development is, what is this work of accreditation? Okay, so I'll go back to another news that SEBI had announced somewhere in August, September 2021. Okay, so this news, you may think it's old, but what if they ask you about accreditation? Because somewhere in August, September, SEBI had introduced the concept of an accredited, accredited investor. Okay, so who is an accredited investor? Okay, now that may be an important point for you to understand. Okay, yes, so an accredited investor. So there are different terms that are used, and all the meaning you should be aware about. There is a retail investor. Okay, then there is a non-institutional investor. Okay, then there are qualified institutional investors. Okay, then there are terms like an anchor investor. Okay, and now we have another term, accredited investor. Okay, so the concept of accredited investor are basically high value investors. Okay, they are rich investors. So they are defined in terms of their net worth, their incomes, and the kind of financial assets that they have with them, right? So there are limits for different categories. For individuals, those limits are different. For partners, they are different. For trusts, they are different. For companies, they are different. For funds, they are different. So SEBI has given certain limits for what type of an investor, like what type of an individual or entity you are, and based on that there are certain limits in relation to your turnover, your income, and the financial assets that and the net worth that you have. And what happens in that case, if you are identified as a accredited investor, you get certain leeways, certain regulations, in following with certain regulation in terms of the investment that you make in AIFs or portfolio management services. So for investing, otherwise there are certain, again, rules and limits, minimum investment criterias which are associated with alternate investment funds and such other vehicles, right? So you get some exemption, or not really exemption but some relaxation when it comes to such regulations. So that is an accredited, and that is the benefit of being an accredited investor. So the agencies that can provide the accreditation, SEBI had told this accreditation can be provided by either the depositories, an agency or a subsidiary of a depository or of a stock exchange, right? So CDSL is a depository. Now maybe they don't ask you in SEBI, usually there are direct questions, they are not asking very deep knowledge questions, but when you read the simple questions like what is CDSL, okay, you should, is it a, and if you are given which type of an intermediary CDSL, okay, so it is a depository. Okay, you should be able to identify what if there are choices like stock exchanges, depository, clearinghouse, right, or a credit rating agency. So what is CDSL? That is what you should be able to identify. Then in India there are only two depository as of now. CDSL is one of them and the other is NSDL, right? So these small conceptual questions can be a part of your finance subject for the general stream or even for the research stream, because there's a segment of financial markets which is there for your research stream of SEBI exam also. So as I am again repeating, when you are looking at these type of news, look at the basic terms, basic knowledge points. You don't have to get into too much depth, and your idea here should not be to start learning the thresholds for defining a accredited investor for different categories. Your understanding should be, first you should be able to understand what an accredited investor is, who provides that accreditations, and what that agencies are, right? Another important development that happens every 2 months is related to the monetary policy. So RBI comes out with its monetary policy every 2 months. So before your exam, last came out in December, which I am giving a glimpse here in short only. Why? Because the proposals, the regulatory announcements that they make are important to look at, and we will have the next MPC come out in Feb. So before your exam, you will have a new MPC of Feb. So have a look at that also. But the December one will also be relevant with relation to the regulatory and development aspects that RBI has stated in that monetary policy. Okay, so some key points that they had stated were related to the UPI based payment systems. Okay, that they will introduce UPI payment products even for feature phones. Okay, so as of now you can use it on smartphones, but how can you use them on feature phones? So that was one aspect. And for the UPI transactions, they have increased the limit to 5 lakhs from the current limit of 2 lakhs, right? And there is a scheme. Now this is scheme had come out almost a year back, retail direct scheme. So what is the scheme? This allows you to directly open an account to invest in the government securities, right? So this is to improve and increase the retail participation in the government debt market in India. right? So this again, this is an important scheme, it's an important development that happened. It has been some time, but it keeps coming in the news in some form or the other related to the details coming about it. So you should be aware about this scheme also. Right. Another news was related to the domestic systematically important insurers. Okay, the list was released. It's a yearly list that is released. This is related to insurers. So this was given by IRDA. RBI also comes out with a similar data for domestic systematically important banks. Okay, and they have also come out with this list recently in January. So you should know which are the banks which are considered as systematically important banks, and the systematically important insurers are three: LIC, GIC, and New India Assurance Company. Okay, what are basically what we mean by systematically important insurers or systematically important banks is they are too big to fail or too important to fail, right? So they have to be saved. Therefore they may have to comply with some additional regulatory buffers. In terms of banks, there are additional buffer of capital that they have to keep with them, so as to reduce the possibility of any kind of failure or any kind of system failure coming in these institutions, because they have a cascading effect on the entire economy. So they are too big to fail is how it is defined as. Right. RBI had come out with its yearly trend and progress of the banking system in December. Same time they had also come out with their financial stability report for December. So this is biannual report, and this is a yearly report. Right. So when we are again talking about these developments, we should be aware who releases. So RBI is releasing the financial stability report also, and the trends and progress of the banking in India. They talk about the banking sector, their capital, their asset quality, their growth in terms of the credit and the deposit. So all these trends are analyzed and culminated in this particular report. Okay, and the financial stability report also looks ahead, looks forward for how it is likely for the asset quality of the banking system to move ahead. So key numbers there, who releases, especially when we are looking at FSR, we should also know the concept of the subcommittee. So there's a subcommittee of an institute. Maybe you can write in the comments which institute I'm talking about, which is responsible for making the FSR, and but this which institute is it, which is like a super regulatory body even above RBI. Okay. Another news was related to tokenization. So RBI last year had come out with a concept of tokenization, which was to be implemented by 31st December. However, this has been extended now. Right. So such kind of news related to the financial sector, these are what you have to be aware about, and this helps you both in your GA paper and the finance paper for SEBI. You can refer to the BPedia. So this is the free resources available at iExamB. You visit the website, under the general awareness you find the BPedia weekly and monthly compilation, in which the news is segregated very nicely in all the categories. There's financial news, there's economic news, there's banking sector news, there is news related to the agriculture sector, there's news related to the technology and science sector, there's news related to various appointments, key appointments in the industry banking system that has happened. There are news related to important days. So they are very nicely segregated in different categories for you to follow it in a very structured manner on a weekly and a monthly basis, and this is available both in English and in Hindi, free of cost. You can download by visiting the website of iExamB. We do such discussions like we are doing related to news, what developments are happening and what key concepts you should be focusing on based on that, and clearing the meaning of terms and concepts with the news. And such discussions keep happening at our live classes in the content and provided as a part of your course in iExamB. So you cover, economic news, current affairs, even static topics related to it. You will get a lot of monthly quizzes on a fortnightly basis to practice from all these topics. What is trending in the economy? What are the budget and economic surveys? So that is another aspect, recent developments you will have to prepare on. So in case you need help in preparation for the SEBI exam, the flat 40% scheme is going on, and it is available for all the streams, for the general stream, for the legal stream, for IT, for research, and for Raj Bhasha. So for all the stream, courses are available and you can avail the benefit from there. So moving ahead, if we look at the Q&A, question and answers, that we can see from the recent developments, what all can we look at. Which of the following market is not regulated by SEBI? So, regulation related question, one or two have been asked always in the past, and not just SEBI exam, in all kind of regulatory body exams, whether it's been PFRDA or RBI or NPS. So these kind of regulation related questions, so you should have good clarity about who is regulating what, which market, which kind of instruments or products, which kind of entities are being regulated by whom. So this is a very good scoring questions if these come. So there should be very good clarity who is regulating what. So for this particular question, it is the money market that does not fall under the purview of SEBI. Money market is regulated by RBI. Equity markets, or we also commonly call them as capital market, is by SEBI. Corporate debt market is by SEBI. However, government debt market is again a purview of RBI. Commodity markets are by SEBI. Before SEBI, it was FMC, which was then merged with SEBI in 2015. So since 2015, commodity markets are also under SEBI. Okay, so this first news that I was talking about, that SEBI had come out with certain rules and changes with relation to the IPO and the proceeds, or the money that is being raised through an IPO for unidentified acquisitions. There is a limit being set. What is this limit? Up to which the money can be used for unidentified acquisitions or for general corporate purposes. Okay, so this limit has been set by SEBI at 35%. Okay, so what it means is, if a company is, say for example, raising 1000 crores from the market, okay, it has an IPO and they have raised 1000 crores from through the IPO, so only 35% of this, okay, what we mean is 350 crores, so only 350 crores can they use for general corporate purposes or for unidentified investment target. Okay, so if they want to, because a lot of startups were raising money and they are going to use this for growth, for both organic and inorganic growth. So inorganic growth is when you're acquiring some other entity to grow your business, right? So SEBI is saying that if you are raising money for such purposes that you want to grow inorganically, then you should identify the name of the entity you are going to take over. Right, so if you are identifying, then there is no limit. Okay, so if you have a proposed acquisition which is identified, then there is no limit. But if you have not identified but you know you are still looking, in that case maximum 35% you can use. The remaining 65%, in this case 650 crores, if I take this as the example, that you will have to use for the purposes that you have mentioned, that why you are raising the money, and who is going to monitor whether you have used it or not. I had told it in the beginning. So if you can say, Nilesh, are you aware who is going to monitor this? So the monitoring is with the credit rating agencies. Okay, credit rating agencies like CRISIL is there. Okay, ICRA is there. CARE rating is there. Okay, so there are 7 credit rating agencies in India. Who regulates credit rating agencies? Maybe you can write in the comments box as an additional question that I'm asking here. Who is regulating the credit rating agencies? Okay, so Nilesh, for second, its answer is 35%, not 25%. Third question, SEBI has extended the lock-in period for the anchor investors. So it was the same news in that the anchor investors lock-in period has been extended by 90 days for half of their holdings. Okay, so as I said, you should be aware about the different types of terminologies are used in relation to investors. So who are anchor investors? Okay, are there investors who are holding more than 20% shares before IPO? Are there institutional investors allotted shares before IPO opens to public? Or are they institutional investors who have financial expertise to invest in capital markets? They are HNIs who are investing up to rupees 2 crore in an IPO? Or none of the above? Which of them correctly defines an anchor investor? Okay. Yes, Kamonashish, CRISIL is correct. It is one of the credit rating agencies. Okay, so for this particular question, question number 3, it is B. They are institutional investors. So anchor investors are not individuals. They are institutional investors who are allotted shares before an IPO is open to the public. So when an IPO is coming out, okay, so they are a subcategory. Anchor investors are a subcategory of QIPs, or qualified institutional investors, sorry, QIIs, qualified institutional investors. So when the IPO is being opened, so before the IPO is open to the public for subscription, anchor investors can be there. Why are they called anchor? So it's like an anchoring. They are, anchoring or putting a base or for the IPO that is going out, say in the waters, to get more subscriptions, right? So they are the anchor investors who are holding the IPO together, the efforts of the company to raise money. And they are, although they are QIP, so yes, they do have the financial expertise also, but the unique part of them is that they are allotted shares before the IPO is open. Okay, and because they are anchor investors who have financial expertise, who have well thought and then put money in the IPO, they are having a lock-in period. Right, so if I give you all these details here, they have a lock-in period, and this lock-in period was till 30 days. Okay, now why this change has come is after the Paytm IPO. Okay, so if any of you have followed, in Paytm IPO, what had happened was yeah, so in Paytm IPO, what had happened was the IPO listed below the issue price, and it fell further after 30 days of listing, when the anchor investors also became eligible to sell, because for first 30 days of listing, the anchor investors are not allowed to sell their investment, the shares that they have been allotted before the IPO. So they cannot sell for 30 days after allotment, right? So when this window ended, Paytm share even fell more because the anchor investors sold in bulk, right? So for anchor investors, SEBI has said they should not, they have understood the market, the IPO well. They understand the markets better, and the company and the valuation aspects better, and therefore they should not be exiting so early, and at least even if they are exiting, it should not be disruptive. And therefore what has happened now is that for anchor investors, the selling can happen in two aspects. The 50% you can hold till 30 days, which is as before, and the remaining 50% you have to hold till 90 days, and only after that you can exit. So that has been brought in for anchor investor. As I was telling you, they are institutional investors. They are a kind of a QIB, qualified institutional investors, or qualified institutional buyers also is the term that is used, right? And they apply in an IPO up to 10 crores. Okay, so that is an amount for 10 crores that is there. Okay, because okay, so answer your question. Come on, Ashish and Nilesh. Yes, you are correct that SEBI regulates the credit rating agencies, tech and games. If they are allotted shares before the IPO, then how are they different from private placement? The difference is here the IPO has been announced and a certain part is offered to them. From their IPO quota only. Okay, so IPOs, when IPO is coming out and a book building process is used. Okay, so know the meaning of these terms also for your finance paper. What is book building? What is reverse book building? Right? So in an IPO, when a book building process is used, there are limits defined for the three types of investors. The three types of investors that are identified are your qualified institutional buyers, then there are your retail investors, and then there are your non-institutional investors. Okay, and based on whether it is a mandatory book building or a voluntary book building, there are certain limits of allocation that you have to do. Okay, at least 50% will be going to the retail, at least 35% will be going to NIIs, at least 50%. So there are certain limits depending on which type of a book building it is, right? So anchor investors, as I said, is a part of this only. Okay, so the IPO money, it is out of the IPO quota only. It's not over and above. In a private placement, that money is raised from certain investors and it doesn't come to the public at all. Here it is a part of IPO only, but before the general public can apply, and the price also can be different, but it will not be lower than the price that is fixed in the book building. So they are not getting any too much benefit in terms of the price. It will be either higher or not below the price that is set under the book building process in the IPO. So this is different from private placement. In private placement, the public doesn't come into picture at all, even later. Okay, moving to the next question. Which of the following best describes the raising of money through a QIP by a listed entity? Okay, so I've been talking about QIP. Just to make sure, what is a QIP? Qualified institutional placement. When I use the word, all these relate to the same thing. If I say qualified II, it is the qualified institutional remains the same. I stands for investors. Sometimes they are also called QIBs, where B stands for buyers. Okay, and QIP is the process, so it stands for placement. Okay, qualified institutional placement. Okay, but they all are referring to the same process or same concept here. Okay, so the money being raised here by a QIP is referred to as, is it raising equity from promoters, or is it raising equity from scheduled commercial banks, or from existing shareholders, or from equity from the public? Raj, what is the maximum limit in private companies? Sorry, I did not understand your question. Related to which kind of a maximum limit are you asking? Private companies cannot come out with an cannot raise money from public. If they do, they become a public limited company then. Okay, so if you can clarify a little, what kind of a maximum limit are you asking? I have not understood. Okay, yeah, so here the answer is your scheduled commercial banks, right? So qualified institutional placement is done where there is issue of eligible securities. Usually we refer to them equity, but it could be bonds or debt instruments also, and they are issued to some qualified institutional buyers, right? And who are these buyers? Usually these are financial institutes like banks. So it's not just banks. Banks is one of them. Then large NBFCs which have more than 500 crore of asset base. Then there are mutual funds, there are insurance companies, right? So financial institutes, big financial institutes fall under these. Commercial banks is one of them. They are not the only people that fall under the QIP or the QIB criteria. Okay, raising money equity from promoters is generally raising equity. It could be from private placement, it could be through any other kind of issue, preferential issues also. Raising money from existing shareholders is actually known as the rights issue. Okay, raising money from the public, it can be in the form of IPO or it can be in the form of FPO. The most prevalent is your IPO. Okay, so 4 is B. Majority of you all are correct, right? Moving to the next question. Apart from QIBs, there are two more types of investors: non-institutional investor and retail investors. Who are retail investors? Okay, so retail investors have a limit of 2 lakh. Okay, so they are called retail investors. For non-institutional investors, actually now they were mostly the HNIs, right? Because they are non-institutional, so they don't fall under the QIB category. They do not fall under the retail category because the amount invested by them is higher. Now SEBI has come out in their last framework. They have also subdivided the NIIs into two types. Okay, can you tell me what are these two types that they have subdivided into? Okay, so they have divided into two categories. One is from 2 to 10 lakh limit. Okay, people who are making investment in above 2 lakh, because if it is up to 2 lakh they are retail investors, so it has to be above 2 lakh, but up to 10 lakh. Okay, so 1/3 the reservation will be for such kind of NIIs, and the other 2/3 reservation, this is the sub limit of NII. So in the overall IPO there are limits for QIBs, NIIs and retail investors. So for this is further subdivided, that of this limit that is there, allotment quota that is there for NIIs, within that 1/3 will be for NIIs who invest up to 2 lakh and 2/3 will be for who invest more than 10 lakh. Okay, so that is another thing that you can know about the non-institutional investors that is prevalent now. Okay, sixth question. What is the minimum price band in public issues which is stated by SEBI? So again, in this SEBI had come out with a criteria minimum price band difference. What is a price band? So in IPOs you must have seen, when the issue is open, you are asked to invest, apply in an IPO at a price, right? So they may say the IPO price is say 550 to 555. Okay, so this is known as the price band, 550 to 555. Okay, this is known as a price band. This is your lower price, or which is also known as the floor price. Okay, and this is your upper price. Sorry. This is the upper price, or it is also known as the ceiling price. Okay, so for the sixth one, okay, the SEBI has said that it should be at least 5%. The difference between the lower price and the upper price should be at least 5% is what SEBI has said. Okay, there is already a rule that exists as per SEBI which used to tell the maximum gap. Okay, they were not talking about a minimum gap, they were talking about a maximum gap. So the maximum gap between the floor price and the issue price could be 20%. Now SEBI has brought in that there should be a minimum gap also, because some of the price bands were very narrow, you know, they were as narrow as this 55 and 56, so not really a scope for discovering a right price. So RBI said there should be a gap of at least 5% between the upper and the lower price limit, and the maximum already exists, which is 20%. So it cannot be a very big range also. It cannot be like, you know, you are saying from 50 to 70. It cannot be a very big range also. Okay. So yes, all of you are, Kamlesh and Nisha, both of you are correct. Nilesh, yes, you are also correct. Okay. Yeah, apologies for the background noise. Uh, Okay, so tech and games. I will take up this query after this question. Why are the companies preferring a band type of pricing? So basically, uh, okay, so before this question I'll take up, they are preferring rather than a fixed one, is they are trying to discover the right price based on the demand, right? So they are giving you a range because this is what a fair value is, what you expect, the fair value that you want for at the company, right? Because people may not always be able to come at a fair value, right? Whether Paytm should be 700 or 70, this is very vast. So there are merchant bankers and valuers engaged to come out with a more or less of a fair value, right? And these fair values are based on what? They are based on financial models which take into account a lot of assumptions related to the business growth and the profitability growth of the company in future, right? So they give an indication of these, and based on that, then it is opened to the market, to the public, to the various kind of investors to see the demand for that particular price, and therefore you are able to discover the actual price, because the price should also reflect the demand from the people, from the takers, right? You may offer something, but if it does not have that value, and if you don't have takers at that price, it will not reflecting the right valuation. So therefore it is then left, after giving a base, it is then left to the people based on the demand to come at a particular price. That's why they go for these book building processes to discover the right price in an efficient manner given the market dynamics. So before this amendment, there was, as I said, there was no minimum limit between the floor and the ceiling price. However, there was a maximum cap that was already existing. 7th question, yes, B is correct. Kamushish Nilesh, B is absolutely correct with relation to the tokenization process. So tokenization is being done to make your online transactions, especially using a credit card and a debit card. It's not just limited to the credit card, it also includes the debit card. So any card related payment, because you have to give your details, right? Your credit card number, the expiry, the CVV, all these details have to be punched in to make the payment. So so that you don't have all of these One, you don't have to remember, and for the safety purposes that they are not leaked from one platform, from one merchant to the other, there are tokens, and these tokens are actually taking into account, so it's like a code. Okay, so this will be taking into account your card details, the token requester. So say if you are making a payment to, on say on Amazon, right, and also a device, right? So if you may be using your phone, or you may be using your computer, or your laptop, right, or a tablet, whatever, you may be using some device. So it's a combination, it is taken into account your, not just your card, because as of now when you put in your card details, it is neutral, it remains the same for every merchant that you are using it for, or any device that you use from your computer or from your uh, yeah, it could be your computer or laptop or anything, but this will be specific so as to make it safer to use these your to avoid any kind of cyber frauds basically, or misuse of your details which are leaked from one side to the other. So this was to become effective from this particular year, 1st January. However, RBI has deferred it to July now by 6 months. Right? So, and this is not compulsory. Okay, this is just and making it easier to just remember. You don't have to put in your details every time about your card and all. But if you don't want to use it, you can continue giving all the details for online transactions. Next question. What is the minimum capital adequacy that is mandated for NBFCs by RBI? Okay, so minimum capital adequacy which is mandated for NBFCs by RBI is 15%. For banks, it is 9%. Okay, so for banks it is 9%. For NBFCs it is 15%. Even for certain kinds of banks it is 15%, like small finance banks and payment banks. But for NBFCs it is 15%. For scheduled commercial banks, for private sector banks, for universal banks it is 9% by RBI, and for banks as per Basel it is 8%. Okay. Ninth question, a finance conceptual question. If a company is a stressed company and it raises funds through a preferential issue as per the relaxations provided by SEBI, other things remaining the same, what will be the impact of this on the debt equity of the company? Okay, so if the company is raising money through a preferential issue, what will be the impact of it on the debt equity ratio of the company? Okay. Yeah, eighth, both of you are right, Nilesh and Kamunashish. Ninth question, it will decrease. How will the debt equity ratio decrease? Basically, it will, when we say decrease, it means there is an improvement. Okay, because our debt remains the same, our equity becomes something E plus X. So the denominator is increasing, therefore the ratio will decrease, which is actually indicating an improvement in the solvency or the leverage position of the company. Right, so debt equity is a solvency ratio. Okay, last question. If a company raises funds by way of QIP from a commercial bank, these funds will be a part of which of the following? If a company is raising funds by way of a QIP, qualified institutional placement, which is a kind of a preferential issue, private placement, from a commercial bank, this funds will be what? Will it be net worth? Will it be a short-term liability? Will it be a long-term liability with short-term assets or long-term assets? Okay, so for the ninth question, Nilesh and Ninad, both of you are saying increase. I hope you understand the absolute amount was being asked. So it is basically decreasing, which is showing an improvement. The 10th question, it is net worth. So even if you are raising it from from commercial banks, actually it is a way of raising equity. It is a private placement for raising equity. So this is a part of your net worth, which is your shareholders capital. Okay, last question related to the news that I was mentioning, that RBI had come out with the list of the domestic systematically important banks for the current year based on the 2021 data. Which are these banks? You can write in the comments box your answer for this particular question. Okay, so that's all from my end for today. Keep preparing, keep following news. You can refer to both the free resources and the paid resources at iExamB for your preparation. If you want guidance, you can avail the discount of 40% flat. I repeating again. Otherwise, you can also keep following for the free resources. There are previous year questions available, there are free mock tests available, there is BPDR general awareness data available, daily quizzes available on our website for your preparation. And the PDF for today's session will also be available in the comments box, so you can download that for the, if you want to refer to these questions, if you like these questions and if you want to practice them going forward before the exam, so you can refer to that also. Don't forget to subscribe to the channel in case you have still not done that. Thanks everybody, have a good day, happy preparation. Do all of you please crack phase 1 and then we'll prepare for phase 2 also. Thanks. Yes, tech, Kamashish, both of you are correct. Nilesh, that is correct. There are these three banks from almost 2017. All these three have been the banks, right? So that was the news that is related to the systematically important banks. Thank you everybody. Have a good day.